has a number of hedge funds, any one of whom will invest in a public company if your story is credible. And the difference between public and private, as Ivan correctly pointed out, private is binary. You go and you make your call, and it's a yes or it's a no. Once you're public, you can access all the sources of private money because the VCs invest in public companies as well, and you can access all the sources of public money. It's a completely different geography once you're public.
So maybe I'll just add a couple things. First of all, in response to one of the comments David made, could not agree more on the importance of being ready for what it takes once you're a public company. Everything David said about the resilience needed and the persistence is so true. One of the things we are asked to do a lot of the times for companies before they go public is run a workshop for their senior executive teams on IPO readiness, and a huge portion of that is exactly on those topics around knowing what it is to be in front of investors and knowing the time commitment, and frankly that investor relations is actually a hugely competitive game when you've got lots of different people chasing after those pools of capital. Second thing, I want to try to answer Ivan's question of, is it worth it when you're going for the much smaller deals, when you're not raising the $200 or $300 million that YM was able to raise, but when you're looking at the $2 and $3 million raises, and is it worth it? And that's a difficult question to answer because, as you've heard from a number of people, the costs of going public and the commitments once you are public are high. But I think, as you've also heard, there are in many cases no better alternatives, and that isn't to say that you're settling sometimes when you are going public. Hopefully you're not, but in the context of it being difficult to raise money, in the context of it being difficult to find some of that early stage funding, that effort, yeah, it's a lot of effort, but if it gets you the $2 or $3 million that allows you to do your next test, or do your next set of trials, that seems worth it to me. And I'd like to just sort of go back, and you may hear me repeat this a couple more times. You know, there are 130 companies, I think I showed you, that have accessed the capital markets in the life sciences sector in Canada over the last 5 years, and about 100 of them have succeeded in coming back multiple times. And so if there's any indication from that, it's either there are 100 or 130 stupid companies, and I wouldn't suggest that that's the case at all, but rather 100 or 130 companies that actually found it was worth the effort.
I think I would echo what's been said around the table. There are definitely benefits and downsides to going public, and it's, you know, the advantage is if you're public, your stock becomes currency, so it's definitely easier to raise capital and get access to more investors. But the downside is you definitely have more regulatory requirements. There's a lot of pressure on the expectations of your R&D results and your clinical trials. And there's also an expectation that you might raise more capital down the road. So sometimes there's a bit of wait and see what the future holds. So that access to capital might just be delayed a bit more.
So I think we're just going to end up with one last question. I'm just going to go down the panel and ask if you had one piece of advice to give to an emerging life sciences company that's in need of capital, what would that be? Start with you, Michael.
Yeah, one piece of advice I'd give everyone here is to surround themselves with really, really good advisors. And that is a broad categorization of technical advisors, public company advisors, legal advisors, investment banking advisors, experienced executives, whatever it may be. All of you are very smart in your own different areas, but I suspect that most of you would acknowledge that you're not smart at everything. And it's so important to surround yourselves with people who've had the experiences and been through the pains and joys of what you're all going through now, and learn from them and work with them and leverage their experiences.
So it's difficult to choose one, but if I'd have to choose one in terms of when you're looking for money, it's really about knowing your investor audience and really doing your homework to tap into the right pools of capital. There are many, many different types of investors in terms of knowledge base, sector experience, their scientific acumen, and their risk tolerance. And it's important to understand those aspects before you actually meet with them and present your company. So do the homework, ask people around, or if you can't find information, call them and ask them directly. Because more often than not, investors are very happy to explain to you their investing style, their outlook, what they're looking for, and their risk tolerance. So it's best to have that well in advance of that first meeting. So you can then tailor your communication, your presentation to that specific audience. And I just want to end by just saying, I would always recommend that you listen to your investor critics as much as to your supporters. I think there's a lot of wisdom to be gained from people to push back to on your ideas.
Yeah, so the one piece of advice, so now that we've talked about all the challenges, I really think that one point would be just be 100% passionate. I mean, the only thing that's going to get you through the 100 no's and ultimately get you to the yes is going to be persistence and believing that it's going to happen. And so that would be my advice to emerging companies.
I'm going to echo to everything that's been said so far, but I'm also going to add that from our perspective, it's always a good idea to come see us early. We love to hear the stories. We have extensive networks, and we're happy to provide guidance around what's needed to get to the next stage, even if it's not senior debt. So the earlier you come see us, the easier it gets for us to provide that kind of assistance as well.
It's not just about the science. It's about the vigor, enthusiasm, commitment, and resilience. And if you don't have the presentation skills, don't go out there, because the last person and the next person in front of OrbiMed has the story down pat. And it's a hugely competitive area. But to everybody's point here, it's about time commitment. And if you're not going to make it, don't do it.
Thank you all. That was a very insightful panel. I appreciate your time today. I want to just open up the floor to any questions that you may have of anyone on the panel. Of course, I hope most will be available afterwards as well, but please raise your hand. Nothing.
Thank you, Tracy.
Oh, one down there.
Andrew.
What advice would you give to an early stage company in terms of how much equity to give up to the friends and family, knowing that downstream investors still want to have a reasonable piece of pie on the table for them to take bigger amounts of money?
So I'm not going to be able to really comment on the friends and family. We didn't do a friends and family round, though maybe we can call our founders, Mars Innovation and Hospital for Sick Children, our family. No, so I wouldn't be able to comment.
It's,
Well, some people call them angels, but you know, I mean, I'm one of those, and nobody's ever called me an angel yet. So, Andrew, I can't answer. I mean, obviously, as little as you can get away with, right?
It's difficult to give an actual percentage on your question, but I think it really comes down to looking at where you are in your life cycle as a company, what are the key milestones you need to hit to increase your valuation, and how much financing you need along that way. So you need to create a really good 3 to 5 year plan, determine how long, exactly how much funding you need to get there, and how much those people at the beginning are giving you. And then you can kind of get a better assessment of what percentage to give.
You had a question?
Yeah, Natalie, you mentioned, yes, thank you. You'd mentioned that it was key for them to understand their market and know what it takes to compete. And I guess it's for anybody on the panel, for the sources of information and getting that kind of information, or what does the Royal Bank look for in terms of telling that part of the story? Because as we've just heard, it's more than just about the technology. It's about understanding the environment that you're going to be going into, your competition, regulatory. Any advice for how to source that kind of information, or how to package that part of the story?
For sure. I mean, by the time that they come to us, it's more operational risks. So they've already come to market, and they have a good sense of what clients would be looking for. So it could be contracts that they have in place, It could be relationships that they have developed over a long-term period that can give them a sense of what that cash flow is going to look like. We definitely share a number of networks with advisors that have information for companies that are earlier stage in terms of what the market trends are and what they can leverage from that as well.
David, can you remind me of the model of the Drug Royalty Corporation, and is there an opportunity or time for a Drug Royalty Corporation 2?
The question's about royalty corps. The answer is we created drug royalty in 1992, and until the year 2000, there was no other royalty company in the world investing in life sciences through royalties instead of through equity. Since then, there have been a dozen major royalty companies created, the largest of which I think is either Cowen and Company or Paul Capital Partners, who created one in Europe, and they have billions and billions of dollars now. So what's happened is the margin between what created drug royalty was this huge margin between a royalty stream and what it might be worth in the future, and the price that they were prepared to pay. Those margins have gone, they've largely squeezed. Thank you.
Brian,
Any ballpark figures on what it might cost a small company to list in the U.S. and how long the process takes?
It varies depending on whether you're trying to go NASDAQ or OTC. So I don't have the specific numbers, but I think what you have to do is think about all the different experts you need on your team to get there. So you need legal advisors, banking advisors, auditors, as well as the actual fees to list. So I'd have to get back to you on specific numbers, but anywhere from $100,000 to $200,000 is probably not unreasonable to expect.
I think it's probably higher.
Higher than that.
Yeah.
Well, yes and no. If you're listed on Toronto or any recognized stock exchange, you can list on the OTCQX, which is a highly reputable exchange, and at least that gets you the nominal listing in the United States. Then when you port to NASDAQ or NYSE MKT market, then you get back in the 100,000. But you can do it for a very small amount. You get a sponsor like Roth Capital Partners who would do it for maybe $100,000 and then a $10,000 listing fee.
I think you also always have to remember kind of the ongoing costs that are associated with listing as well, so that you're going to have much more, as far as reporting and legal and audit and those types of things that will have to go into that.
So just to elaborate a bit more on that, again, David talked about a really useful structure, which is to list on, let's say, TSX or TSX Venture, and then get the U.S. exposure by listing on OTC markets. And so if you're doing that, you do need to obviously deal with the public company costs in Canada as well. So there is that sort of additional bit there. So just addressing that part of the equation, listing on TSX Venture, the ongoing cost that we charge is less than $50,000 a year. The bigger cost is the accumulation of all the other fees, legal, accounting, and so on that you've heard about. You also asked about timeline. From the Canadian perspective to list, we always give sort of a 4 to 6 month timeline as a decent rule of thumb, and that's really from beginning to end. Complicated deals can take much longer. Easier deals can take less time, but I think that's a decent starting point to think about. And then depending on how you add the US listing, if you're going to OTC markets, much quicker. If you are adding a full New York or NASDAQ listing with the full registration with the SEC, much longer and much more expensive just because of the additional regulatory burden that they're going to bring.
And the OTCQX incidentally avoids Sarbanes-Oxley compliance, so you can continue under Canadian compliance without SOX, and the Sarbanes-Oxley full listing stuff is hugely expensive. But the OTCQX is highly recommended for smaller companies.
Any other questions? As I said, thank you again to our panel. It was great to hear all of your perspectives and your experiences. I think we've all learned a lot today. Just going to turn over the mic to Jason for some concluding remarks.
Thanks, Tracy.
So thank you, Tracy, and thank you to the panelists. You know, one thing that stands out for me every time we talk about this access to capital challenge is that it's a challenge that's pervasive through many other aspects in our industry. So you hear a lot of folks talk about the other big challenges, commercialization, youth unemployment, and you dig down into some of those areas too, and they all come back to access to capital, it seems. If the companies, the small companies in life sciences had better access to capital and are able to focus on commercializing their technologies and hiring young scientists, you know, a lot of these issues can be solved through better access to capital. So I think it's an important issue that we need to continue to focus on and work hard to address. So I appreciate the insights from the panelists today. Thank you all very much for participating. I have a few quick announcements. But before I go through them, I just wanted to call on Maureen Angus. Maureen, if you could come up just for a minute. Maureen has just a quick announcement. Maureen's from Ministry of Economic Development, Trade, and Employment. She's got a quick announcement for us.
Thank you, everybody, for your patience with the government advertisement. Very briefly, I've recently taken over the UK, Ireland, and Southern Europe portfolio at the Ministry of Economic Development and Trade from my colleague Laurie D'Souza, who some of you may have known, who recently retired. I've been in the job a week and a half. And I'm on a steep learning curve because I've spent more than the last 20 years covering South America, so mining and infrastructure. So one of the key markets, I believe, and that may be of interest to people in this room might be the UK, and I'm going to try to recruit next week for an upcoming event in May. I'll be taking a trade mission to London to the UK show, which is called BioTrinity, which is in the biopharma space. That's the extent of my knowledge after a week. But I will be getting some information out on participation. It will be very low cost for any of you to come along. We'll take 5 or 6 or 7 companies. And I think the real value will be the partnering side of the forum. And hopefully there is some financing also in the UK and Europe and not just in the United States. If anyone's interested in getting more information, and I'll be doing a broad mail out, but please come and see me today if you want to give me your card so I don't miss you when I try to do the mail out next week. And as I get more knowledgeable, we'll be doing more in this space in my new territory. Thanks a lot.
Thank you, Maureen, and welcome to the portfolio. And we will certainly send out that material as well to all of you and our members as those materials become available. So just a quick run through of our upcoming events. Our next Knowledge and Network Breakfast Forum. We'll be taking the month of March off, but we'll make up for it. We'll have 2 events in April. And the first one will be our annual general meeting, which will be hosted at Ernst & Young. So stay tuned to that, and we'll be announcing the speaker for that shortly. Our annual awards gala is coming up next week. It really is a superb event, and we're just about sold out. But if you beg Sue out front, I'm sure we could still find space for you, and we'll squeeze you in. It really is going to be a great showing. We have quite a strong group of supporters from government, from industry, senior leaders. It's going to be a terrific networking opportunity and an opportunity to celebrate outstanding achievements in our life sciences sector. We have an upcoming SIM1 sponsored pub night. It's also sponsored by AutoSim, and I believe they're here today. There you are. So please come out and join us. This will be held at the Marche at Brookfield Place. Great venue. Andrew Yoshioka, who's our Volunteer of the Year, and will be honored next week at our gala. He's our organizing chair of these events. Great networking opportunity, no cost. Come on out and meet some of your peers in the space. Speaking of peers, one of the things, and we talked about this at the panel as well, opportunities for learning and best practices. So about a year and a half ago, we started a peer-to-peer group for entrepreneurs. And we've been holding these meetings quarterly. Doreen D'Souza, Doreen, raise your hand there so people know who you are, is coordinating. She's one of the co-chairs of that group. And our next peer-to-peer roundtable for entrepreneurs will be held on March 6th. And the topic will be around market research. And we'll be bringing in some expert speakers on that. And that will be held at BLG. Next month we have Biotransfer. It's a new event to Toronto area. It has been held in past in Quebec. Great event, and we've sent out all the materials on these. We'll continue to do so as that approaches, so mark your calendar for that. And finally, I just want to say thank you to our sponsors, City of Toronto, RxD, Sanofi Pasteur, Richmond Hill, Ernst & Young, and Novartis. Sorry?
Just a question to you.
Sure.
I think it was last week or the week before, you sent out a survey
Yep.
for the consultation back to Industry Canada. Can you tell us the status and what the consolidation of opinions were?
Sure. So Rick's question was last week we sent out a survey regarding consultation process that was issued by the federal government on the science and technology report, and we have submitted on behalf of our members, a response to that. It is posted on our website, Rick, so you can go there and you can see what the final result was. And we'll also be putting together a submission for the budget consultations as well. So we continue to be very active in terms of representing the voice for life sciences in Ontario. So with that, I just want to say thank you to all of you for attending this morning. Stay tuned to our events. We send these out every Friday.